What's up investors, Spier is here. Seritage Growth Properties has been a value community darling for over a year now. Started with Mohnish Pabrai buying into the opportunity, so much so that he's now the biggest owner of Seritage with over 10% ownership. Followed by other super investors in the value community such as Spier and Hodgkins that have substantial holdings in the company. I first looked at Seritage at the beginning of 2021, but quickly determined that the company is too hard for me to understand. Seritage was so hard to understand at the time because the reports were too slim on details and I couldn't figure out the value of the asset or the prospects of the company. So I decided to let the super investors remain with that and go to other ventures. But recently, since Andrea Olshan got the position as CEO, she reorganized the assets and got much more transparency in the reporting. So now it's easier to understand and easier to figure out the value proposition. And once I was able to figure out the redevelopment projects and the prospects of the company, I was able to see that it's really in a deep value right now. So much so that I think that a turnover story in the next 2 years might see Seritage rise in price over 100% gain. So let's examine what I see in Seritage and why I think it will more than double in price in the next 2 years. Guys, before we continue, I want to mention that everything in this video is merely a summary of the deep dive I wrote in my blog, which you can see right now on the screen. Link in the description. If you're really interested in going deep into the analysis of Seritage and you want to follow links and see all the references I talk about, I highly recommend you will go and visit this blog after this video and subscribe to the newsletter to get more research from me in the future. And with that said, let's continue. First, let's start with a business overview. Seritage Growth Properties is a REIT founded in 2015 as a spin-off from Sears Holdings. $2.7 billion worth of assets were purchased from Sears using $700 million funding from the stock market as the offering for the investors, and additional $2 billion are raised as a debt from Berkshire Hathaway. And we will talk about this debt because it's a really pain in the ass for the company. As a spin-off from Sears, most of the tenants were naturally Sears and Kmart's and other brands of Sears. The plan was gradually to redevelop some of the assets and get other tenants and that way diversify the tenant portfolio. But Sears declared bankruptcy in 2018, way before Seritage was ready with the development projects and the diversification of the portfolio. So they lost a lot of the tenants really quickly. And that led to a real downturn in the rental income for Seritage. As if that wasn't bad enough, less than 2 years later, COVID hits and saw a lot of the redevelopment project of Seritage really slowing down and a lot of tenants leaving because of the pandemic. So that led to even further lower income in rents. You can see right now on the screen a graph I included in my newsletter post, which you can see the rental income going slowly down. First in 2018 when Sears went bankrupt and then again in 2020. So the image of rental income really looks bleak when you look at it like that. Now let's not stop there with the bad news, let's talk about Seritage debt. The original debt was $2 billion from Berkshire Hathaway with a maturity date of the end of 2023. But things have changed since then and it's really important for the story of the company, so let's go through the changes. First, we have $160 million of principal paid just last week, which lowers interest payment by $11 million. We get why this is very important. A recent agreement extends the loan to July 2025, given the principal remaining by then will be $800 million. So that's just kicking the can down the road, which is really helpful for the situation that Seritage is in. So we have right now $1.44 billion remaining debt with 7% interest rate, which is a very hefty interest rate weighing down Seritage. As I said, that relates to the interest payment that is really heavy. There are a lot more details in the newsletter, so check it out if you're interested. But what I want to do next is showing you this graph of interest payment relative to the income from rentals through the years. So you can see it right now on the screen and you can see that as rent goes down, the interest payment doesn't go down obviously, and it weighs down so heavy on Seritage. And that's what you see here. It's without management fees and taxes and all the other things which push Seritage way into the loss territory. So we need to really focus on this debt, and the fact that Seritage was able to pay down $160 million last week, and the fact that Berkshire allowed to kick the can 2 years later, it's all very, very important. But the main story is whether Seritage will be able to recycle this debt, because 7% interest rate is really hefty. If they will be able to recycle some of this debt, the story might change. And that's where I really look into in my turnover story. So the turnover story for me is focused on the path to get back to profitability for Seritage, because their net asset value of the assets for Seritage is obviously so much more than the current price of the company. And a lot of other guys already calculated it, like the Stock Compounder YouTube channel and Investing with Tom. I recommend checking them out. But I want to focus on the path for profitability, because the reason that Seritage is so low on price right now is because they have the risk of defaulting on the debt. They have the risk of becoming a zombie company, only serving the interest rate. But once they will be able to go into profitability, all this story will change in a snowball effect. If Seritage will be able to get $30 million additional quarterly income from rent, they will be able to get close enough to profitability that they will be able to recycle a lot of the debt, because it will be much more compelling for institutional debt. And instead of 7% interest rate, they will be able to pay much lower, let's say 4.5%. That's what I calculate against. For profitable REITs, it's usually right now around 3%. And Andrea Olshan, the CEO, she mentioned expecting to get 3.5% at one point. But just to get a margin of safety here, I went with 4.5%, which will in turn lower the interest rate payment every quarter by $10 million, which will lead, if we get to additional $30 million in additional rent, as I mentioned, get to profitability. And once the company will be profitable, the price will rise to expect that instead of expecting the risks right now. And if that will happen, we can expect to get at least to the price prior to the COVID hit, which went from $40 all the way down to $8, and now it's $14 or $13. Which means if we get to $40, it's more than 180% gain on the stock. Even if I'm wrong and it's only going to $30, that's over 100% gain. And I think they will be able to do it within the next 2 years, looking at the redevelopment projects and everything. So let's go and get a taste about why I think this is possible. So we need to get additional $30 million in rental incomes quarterly. And there are 3 main paths for that. First is S&O, signed but not yet opened leases. Second is all the redevelopment projects. And third is all the vacant space right now, as the management shifted and all other causes, COVID and everything, that prevented Seritage from effectively renting this space. So if we collect these 3 paths, redevelopment, S&O, and the vacant space, do we get to $30 million? Let's start first with the S&O projects. The S&O, in the last report, we see that they have additional $28.5 million already signed, and most of it is for redevelopment projects that's open either in this quarter, the fourth quarter of 2021, or the next 2 quarters. So 28.5 million annually, which translates to additional 7 million every quarter. So already we shove $7 million of the 30 million we need to get to. Next, let's quickly talk about the redevelopment projects. Again, I mentioned if you want to go into the details and see all the things I talk about, it's in the newsletter, link in the description below. So first project is Park Heritage in Dallas, which is a really huge project. You can see the plan right now. It's over 1 million square foot of just offices, on top of another 300,000 square foot of retail and hotel and residential units. It's really huge project. And when I calculated the estimated income from this, and I was really taking huge margin of safety on everything and took the lowest estimation on every income stream, I got to $12 million of additional rental income every quarter. So that's that's a lot. We're already down from 30 million, 7 million on the S&O, $12 million on this project alone. We already need to fill only $10 million. Next projects, we have the collection at the UTC, which is a huge project, and in the last report we saw the S&O for it, but the S&O mentioned only about 20% of the space list, but a recent PR mentioned that it already got to 88%. So these projects are really going fast. Even though the numbers are not in the report yet, it will be in the next report. You can see right now on the screen from one of their presentation the leases prices for what they call the UTC, which is La Jolla. You can see it right now. Next we will talk about Aventura, which is also on the screen right now. You know what, let's talk about them combined. For Aventura and for La Jolla, in the spaces they have its additional $1.1 million for La Jolla and additional $2.1 million for Aventura every quarter. And it already, both projects got us down to $7.7 million we need to reach after them, which leads us to the unleased retail space. In the reports of Seritage, they have attribution for multi-tenant retail space, for premier mixed use, and every appropriation is separate projects, separate redevelopment projects, and with separate expectation for income. And if something is appearing in this section, it means that it was already redeveloped. I mean, it's specifically in the sections of multi-tenant retail or premier, redeveloped or in plans for redevelopment. But specifically when we talk about unleased retail space, which is mentioned in these spaces, we can expect that it's already ready and just need to be leased, which I expect it will be leased in the next 2 years. So if we take really, really low estimates, the retail space, I calculated it against $10 to $13 per square foot, which is really low. And for the premier retail space, I calculated with $20 to $23. Again, all the details in the newsletter. So we get an additional $6 million on the top end, or $4 million. Let's say we take some margin of safety and we just say $2 million because some space will remain vacant. That's the nature of the business. We're already down to less than $6 million in other rental income that we need to get to. Which leads me to the last thing, which is additional redevelopments. Not all the redevelopments are mentioned in the reports and everything that I got into. And really huge redevelopments are in the pipeline. For example, we have the Boca Raton project, which had legal difficulties back in 2018, but is in full speed right now. At least that's what the presentations and interviews led me to believe. So if that's already running and it will be finished by 2023, that alone will get us more than $6 million in quarterly income. But even if that's not the case, there are additional redevelopment projects that I didn't mention, like residential projects that are just too cryptically described in the reports that I couldn't value, but they are mentioned as really big projects. You can see it right now on the screen, and you can see that those projects are huge, and they alone can push us forward. And even if they won't push us forward, less than $6 million lacking, if after all the margin of safety that I took, is really low. And within the next 2 years, there are a lot of redevelopment projects probable to happen, and Seritage already know how long each redevelopment project takes. It takes between 18 months for some projects, or the Premier took 24 months, which is in the range when we look until the end of 2023. So I expect that within the next 2 years, they will get to profitability. So that's why I think the company will get really, really high. So that's it for this video, guys. I hope you learned a lot. If you want to go into more of the deep dive, where I talk also about the management a bit, I show you all the numbers, links to all the redevelopment projects and things like that, check the link below, and I hope to see you next time. Bye bye.